Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been trading cannabis stocks for over 13 years. We're going to check in on the sector after another wild week of volatility. U.S. names getting smashed on Thursday, a bit of a recovery on Friday. Certainly still a ton of volatility in the higher listed names. We're going to talk about where we stand, whether or not the bulls still have their control, and what we're looking at from here for potential entries. All right, so we're going to do a little bit of looking back at how I personally traded the end of this past week, looking forward at what I'm anticipating and how I'm going to maneuver around to start this coming week. We're going to look at the psychedelic sector a little bit, and of course, all things cannabis. So the last YouTube video that I did was on Wednesday, and just a heads up, sometimes I put little quick videos on Twitter. Sometimes I put content on our Chart Guys Cannabis Hub, and this is worth keeping an eye on. Here I got my MJ fact sheeting guide, lessons from the 2018 hype run. It's an article, interview video as well. So worth keeping an eye on that. But first let's start. So after Wednesday we checked in, bulls looking great, in full control, strong close. And I was in a good amount of swing positions looking for a gap up open. And again, the general play in 2018 on that run was be long overnight on strong closes, sell first thing in the morning, reload that dip for the hourly higher low, and look for continuation. And we use short-term oversold conditions, what we call back burners, 5 and 15-minute oversold, to look for those hourly higher low entries. So that played out a bit, though the red flag for the bulls was we had after-hours strength, where names like CGC went up to 11.30, and ACB went up to went up over, upper sevens towards $8. And that was after hours on Wednesday night. And then by Thursday morning, when the open rolled around, a name like CGC had given back. We got up to 1147, more than that, 1147. And then by the open, we had given back 10% plus. And that for me was a little bit of a red flag. And that helped me know to be looking to take profit on swing positions right out of the gate. Again, looking for that drop initially. So first thing on Thursday morning, that's what I was doing. I was exiting swings. I sold MNMD, got a real good sell at 12.50. We'll talk about that when we get there, but you can see 9.38, right when the bell rang, I'm exiting CYBN because we weren't breaking the high of Wednesday, first thing in the morning, and then I exited pretty much everything. And I was being in protective mode, locking the gains. I don't want to sit through a 10% pullback on those positions. So sell everything and then look to day trade that play. And then we were playing ACB in the chat room, and it was mostly this play right here, looking for the entries. I think I was in the 660s. And then again, just straight up 30% move. Massive opportunity, 37% in less than 2 hours on that bounce play. And so again, that's what helps me in euphoria. When you get that kind of setup, it's what helps me outperform just buying and holding because, I can skip. I didn't swing ACB personally, but if I had, I would be out at, 720 and then reload at 660 and then hold it for the continuation and take profit into euphoria. That's just how I actively trade it. For now, I'm going to be watching for daily higher lows to be established first thing this week. And on Friday, we had weakness in again, we're going to separate things, higher listed names and then lower listed names. MSOS is a higher listed name, but it's clearly, being contained because it's compiled of OTC listed names. So, it used to be Canadian and US, but now I think the best way to break things up is higher listed, lower listed. And so CGC, we were looking for first hourly oversold conditions. We know that in the strongest uptrends, first 5-minute oversold conditions mark an hourly higher low. That's the back burner. First hourly oversold conditions mark the daily higher low as a back burner. And so CGC on Friday was getting down close to hourly oversold. At the lows of these candles, that hourly RSI was down around 30, 35 or so. But bulls then bought that dip significantly into Friday afternoon, and we did not get to oversold. So we can say that if the daily higher lows form from here, that shows a lot of strength. Reason being, we didn't even get to hourly oversold. What does that tell us? That tells us that the bulls are aggressively buying the dip, and that would be bullish. That's a potential little bull flag at the moment. What I need to see take shape is an hourly higher low. So this was a 10% plus bounce, almost a 15% bounce Friday afternoon, and it created a lot of space. So whether we open higher or lower on Monday, we're going to be looking for hourly consolidation. Bulls want to hold 895 and confirm an hourly uptrend. And if we do that, the daily higher low is set, and we're then looking back up at the high of 1157. And if you're a swing trading bull, you could just be walking up a stop loss with every daily higher low. And if we set a new one on Monday by breaking 1038, then our stop would be up at under 893 to just keep walking it up to ensure that when weekly consolidation happens, that you have taken some profit before then. So there's also a way to compare individual names. Oftentimes you can look at retracements, the fib retracement sizes, but it's also just simple math. So CGC, with where we stand after the end of Friday, the space above the low of Friday, we've got 13% space to form an hourly higher low. ACB, very similar, 13% space after that bounce. But you look at a name like SNDL from the high of the bounce Friday only has 6% of space. So we could say there's twice as much space in those other names, which means to me, it's more likely that an hourly higher low will form in those other names comparative to SNDL. They all could form an hourly higher low, but again, we're trying to determine probabilities to know where to be looking, and we set the hourly lower high into the end of the day Friday on SNDL, so 227 is now the most important hourly resistance, whereas CGC didn't set the hourly lower high. It bounced and held those gains into the close. So just little nuances, little differences in these setups help us determine where we want to be focusing. So I've been focusing on CGC and ACB for my day trading in this sector. I love the liquidity, the volume, and the volatility. All great. So I will be scouting hourly higher lows for entries on ACB and CGC. And the good thing about the size of this move, it gives us a clear level to play off of. I've got my invalidation point. If I'm making an entry for an hourly higher low and I'm looking in the mid $9 range, if we drop down and break the low of Friday, clear red flag, you're wrong. This is not a daily higher low being set yet. The bears are still in control here. But it was an encouraging end of the day Friday. Again, CGC, that candle is just fine. In terms of the volatility, it was a 20, it looks just fine, but it was a 20% plus pullback. So certainly have to sit through a whole lot of volatility if you are a swing trader. ACB, same deal as far as, well, a little different. We did set the hourly lower high Friday at 705. That's now the most important level. If we hold the low of Friday, break 705, we confirm an hourly uptrend, the first step towards the daily higher low. One difference here with ACB is, and it's keeping me a little cautious, let's look back here. Again, we had the huge volume day, massive squeeze day. We then had a follow-through day with a big upper wick. We pulled back and set the daily higher low after that upper wick candle. There's your huge volume green candle, not quite the same magnitude. There's your upper wick pullback reversal candle. There's your pullback to try and set the daily higher low. So we have previous history to look at here. What would be a red flag? Set the daily higher low, then the lower high, confirm a daily downtrend. Big red flag that the party's over for now. Again, headline changes everything, but in the absence of a headline, we're going to be looking at most likely scenarios, and so we'll be watching for the possibility if ACB sets the daily higher low, we know anything under 888 is just a lower high. There's a lot of space for that to form. We can go up, 30% and still just form a daily lower high. And if we confirm that daily downtrend, we'll say this is exactly what happened last time around, and that will make us cautious that a temporary top is being set. So again, just comparisons from where we stand right now, ACB to get back to the higher high needs 35%. CGC to get to a higher high needs less than half of that. It's a big difference in terms of where we stand. Tilray, same deal, looking for the daily higher low, hourly, decent bounce, not a ton of space. Some names have more space than others. Tilray has only 6% or so very similar. CGC and ACB, 13%. SNDL, TLRY, 6% to try and set that higher low. If we do break the lows of Friday, the hourly downtrend continues as our guide, knowing that we must change the hourly trend back to the bulls. And again, if you're struggling to understand trends in terms of when I'm saying higher lows and higher highs and all that and pivots, go to our YouTube channel and look up Joey's webinars. I guess I'll help you real quick. These are, you know, if you want to put in, get the most bang for your buck in terms of educational content and useful things, go to, might not be a public one, playlists and Joey webinars. And there's 4 of them, and it's about, you know, 5 or 6 hours of content, but that's the backbone, the pillar, the foundation of understanding technical analysis and price action. Highly suggest watching those. So SNDL, hourly downtrend is our guide. Hourly resistance from the Friday afternoon is key in the short term. GRWG, so what's the difference here? Well, we pulled back to daily support. This is a little bit of a red flag. Why? Because we now have space to potentially shape up a head and shoulders. A head and shoulders is when you go from an uptrend, higher low, higher high, lower high, lower low. You just change trends. That's all a head and shoulders is. But there's a neckline of support now, 266, 267, and there's a lot of space, again, for that daily lower high to form. We would need to see notable increasing bull volume if we're going to be able to see continuation here. If it's lower bull volume, then we're going to anticipate a daily lower high. Again, knowing we can bounce 20% and just set a daily lower high. So I have to be a little bit cautious. What's the difference here? Well, we pulled back to the last daily higher low. If CGC had pulled back to the last daily higher low, we would have dropped to 725. We didn't get anywhere near that level. CGC, from where we currently have dropped to, would have dropped another 20% to get to that size of a retracement. So I would say that it's a little bit of a red flag that GWRG gave back all of this move up to get back to the daily consolidation level. It's still holding support, no doubt about that, but again, it's just a different setup than these other names when we're doing this comparative analysis. HITI, again, volume increasing. Bulls want to see that continue. Same deal, tons of space for the daily higher low. Hourly is our guide. A difference here is we dropped to a clear lower low Friday afternoon. None of the names that we just looked at hit a lower low Friday afternoon. So the hourly downtrend continues. You can view it if you want to use extended hours. We got 290, lower high, lower low, lower high, tried to tighten up, broke bare. So on Monday, anything under 268, just an hourly lower high. Support is 238, didn't get towards hourly oversold conditions. If the hourly downtrend continues on any of these names, because none of them have an hourly uptrend at this point, but if the hourly downtrend continues, we're then going to be looking at hourly oversold. And we will get to that back burner setup, but bulls would love to not get to the hourly back burner because, again, that just shows there was so much dip buying, it didn't even allow for that, that much consolidation. So on the U.S. side of things, any accounts on Twitter that are talking about the S&P 500 and broader market move in the context of Thursday's dump is worth following and paying extra attention to. There's too many people in the cannabis sector that have their blinders on and are only watching cannabis and think that it's, you know, trading in a vacuum. We dumped on Thursday because of the broader market. Would we have pulled back without it? Sure, probably. We had a couple negative headlines, but we did not do this because of DeSantis comments or New York regulations news or anything like that. We did that because the S&P 500 did that. You have to be watching the broader market when all major sectors, QQQ, XLF, XLV, are hitting the low of the day at the same time. A light needs to be flashing in your brain saying, this is different. This is money leaving the market. This is not the normal bullish rotation. When that happens, I do not long for that day. I do not look long in anything if the market, the broader market, is seeing that kind of drop. And that is what was happening on Thursday. Nice recovery Friday. Again, the reason, you know, it's without a doubt, a lot of the reason that the cannabis sector recovered on Friday is because the broader market, well, you know, all those major sectors I just mentioned were all up over 1% on Friday with that recovery. And now we're going to watch, how does this tightening range play out from here? So on SPY, you know, big dump, big bounce, but a lower high is most likely, and we're going to look to tighten up. And the direction that that tightening range breaks, potentially Tuesday or Wednesday, is going to have significant short-term implications. Can the cannabis sector do its own thing and ignore the broader market? Absolutely. But correlations sync up more in fear. Thursday is the best example that you need for that. That's all you need to show So bigger picture on MSOS, we're still a daily uptrend. Anything above 903 was a daily high or low. Again, big red candle, huge volume. That's not a good thing. You do not want to see that amount of volume. The highest volume day in months, and actually, was it even higher than HHS? Wow, it was the same as the HHS news volume. So we matched the highest volume day in years, potentially, ever. Wow, was that the highest volume day ever? Yeah, we tied the highest share count, highest share, second highest. Tied the second highest share volume ever on a big dump day. Not good. Again, good recovery, daily inside bar. And if we break 10-15, we'll have a daily higher low set here. But I did exit a bit of my core swing position, just a small amount to give myself some cash. I always want some cash to be playing around with, to be able to buy dips and things. And I mishandled Thursday. So as I mentioned, I got my core swing. The account that's in is at all-time highs Thursday morning. Everything's great. The pullback Thursday afternoon, no red flag, no red flag, red flag. It took 2 hours for everything to change massively. And in that 2 hours, this shows you the magnitude of an illiquid trading instrument or sector, whatever you want to call it. 13% drop in 2 hours is massive. There was no bid support, and the selling pressure was immense. Very high volume, smashing the price down. Shout out to whoever Thursday afternoon bought $10 million right in the last minute with some market buys there. That went up nicely on Friday. But essentially, Thursday for me was a little wake-up call. Like, I missed, normally I'm hedging or protecting a bit for that kind of a drop. It happened faster than allowed for me to protect. And so it's a wake-up call for me in terms of this bounce is my second chance to size down a little bit, get some cash to be able to maneuver, because for me, the most likely scenario is a 4-hour lower high. You can look at it on the hourly or the 4-hour. I like the 4-hour a little bit more clear, just smooth things out. I'm looking for a lower high compared to where we came from, 1096, and then a pullback and a higher low compared to 925 and a tightening range, just like the S&P 500. They both bounced 50% plus retracement, creating the space for the higher low, but it can break. That tightening range can break either way, again, Tuesday or Wednesday of next week. For the less likely scenarios, whenever I talk about most likely scenario, it comes from, looking at 150,000 charts over the last 10 years and just a lot of experience and watching things play out. If the less likely scenario is going to play out, it has to have high volume. So I say the most likely scenario is a 4-hour lower high on MSOS. If I'm going to be wrong and we're going straight to a higher high, it has to be on very high bull volume on Monday or Tuesday, whatever. But you don't get the less likely scenarios taking place unless there is very high volume. And someone asked, so I sized down a little bit in both TCNNF and MSOS with this mindset. And someone asked, well, what if we keep going and we don't get the pullback for you to reload cheaper wherever that's at? And my mindset is, my answer, so what happens? My net worth keeps going up. I have a higher net worth than yesterday if we keep running. And I just patiently wait for the next entry opportunity where I like the risk and reward setup. Yes, I will leave some money on the table, but that's just part of the game. And for me, the risk and reward and me being in a conservative mindset would rather be protective of the gains to this point and not, fully allocated in a scenario where I feel a lower high is the most likely scenario. So anyways, that's just me and, maneuvering around. One other thing we got to be cautious of, again, in the absence of a headline, bulls really don't want to top out here because this is a rising wedge. A rising wedge is a bullish exhaustion pattern. It means the bulls are tired and they've used up their juice. Can a headline change that? Absolutely. But as some of our Chart Guys members were pointing out before the dump on Thursday, this was an hourly rising wedge. And I did not expect it to confirm to the magnitude that it did, but nice eyes keeping on it, Bird and others, JP, I believe. But that shows bull exhaustion, higher high, straight into a pullback, higher high, straight into a pullback. And so that's the weekly now. It's the same setup. Higher high, straight into a pullback. Higher high, is it going to go straight into a pullback? So again, this, the only way that this would confirm, in my opinion, would be significant broader market weakness in an absence of headlines in cannabis. No news coming in April. I know a lot of people think, second chance month, we could absolutely get news in April. I have no idea. But if news doesn't come in April, then I would anticipate we can easily see some weekly consolidation in the absence of news. And there was one more, or bad news scenario. What would be bad news? I don't know. But that would be another scenario where this could potentially play out. So again, in a lot of these videos, I highlight possibilities. Be cautious. I'm watching for this. Same thing on the way up. I was saying I'm watching for this to be a potential head and shoulders. It didn't shape up. It didn't confirm. I was watching for it. I was ready for it. It didn't happen. So, we don't act on it because we kept the daily higher lows. Same thing. I'm saying, if I'm all bull on a chart, I put on my bear glasses and say, what is the opposing side thinking? I want to be in the mindset of a bull and the mindset of a bear to try and remain unbiased. And so I look at that chart and say, all right, if I'm bullish, which I am, we're still in a daily uptrend, I just need to be cautious that this is a possible bigger picture rising wedge. And we'll know within the next 4 to 6 weeks, how could this play out? Well, we could pull back for a couple weeks and set a higher low and then bounce for a couple weeks. This could take 4 to 6 weeks to play out before we know if it's a rising wedge or not, but it's just a little, okay, and I'm now aware that this is a possibility, whether it's the most likely scenario or not. I don't think it's the most likely scenario at this juncture, but I'm aware it's possible. So this will not surprise me if it happens, and I will not take a significant hit in my account if this were to happen because I'm now prepared for it. So just be aware that, when I do give the opposing side, I'm not saying this is a rising wedge that's going to break bear. I'm saying as a trader, I need to be aware of this possibility so I can mitigate my risk. So we're going to look for tightening ranges. 4-hour lower high, 4-hour higher low. Next thing you know, it's Tuesday or Wednesday. And then we'll see the direction that tightening range breaks. Trying to look back here and see if we can get a comparison of a similar time, probably on the way down. Yeah, not going to do this on the fly, but anyways, there's a lot of space for that lower high. Bell can ring. We can go up 5% on Monday and still look for that lower high. And again, same deal. You want an entry. You're waiting for consolidation. You're using that low. That 925 level is now a must hold in the short term for the bulls to keep their full control. So any entries that are made, that are wanting to be protective and aren't, a time horizon of into the election plus is using that 925 level as a guide and a potential stop level. Individual names, TCNNF, same deal. So, daily inside bar, still a daily uptrend. Bulls need to hold 1145 into this coming week. If we lose 1145, weekly consolidation is underway. We'll then watch weekly EMA 12, which has been holding, but bulls really want to hold the low of Thursday, that fear low. 4-hour, same deal. There's space for anything under 1375 to be a 4-hour lower high. And because of this bounce retracement, Google Chart Guy's Fibonacci video, because of this bounce retracement, there is also space for a higher low compared to where we came from, 1145. So again, I took a little bit of my position off, maybe 20% or so, free up some cash, and depending on what the broader market does, I may reload it and play off that level, or I may be patient and watch for the possibility that weekly consolidation is shaping up. I'm just waiting for information Monday, Tuesday to help me determine, are we going to hold that fear low from Thursday, that flush low, or are we going to break it? And obviously, if I feel we're going to break it, I want to be holding off buying and wait for a bit lower. But as always, technical analysis is not predictive. It is reactive. I'm going to be reacting to information we get Monday in the first hour of trading, Monday midday, and that's going to allow me to determine probabilities in an ongoing basis. Always changing. AY. So again, I'm focusing on the Florida names still just because they do still have a little bit of relative strength. If we look at TCNNF divided by MSOS, bulls really want this to be a weekly bull flag. And right now, it is a weekly bull flag unless proven otherwise. If this 118 level holds, simple statement, if 118 holds, it's a weekly bull flag. And that would be a great sign for continued relative strength. But keeping an eye on that. previous resistance as support. And again, looking at, TCNNF divided by GTBIF, it's the strongest, Friday was the strongest it has ever been compared to GTBIF. No, rephrase that. TCNNF on Friday hit the strongest it's been compared to GTBIF in the last 16 months or so, 15 months. So still relative strength there, trying to confirm the bull flag, just comparing those two names. So again, nothing, majorly wrong with the other names. I'm just, because I'm looking at so many things. I'm trading gold and silver. I'm watching crypto. I'm watching AI names and Tesla. I've got my attention so many other places. I just stick to a few names: CGC and ACB, MSOS, TCNNF, MNMD. That's where the majority of my focus is, to not miss other opportunities. I mean, gold and silver providing massive opportunities this last month, and I was posting about that silver cup and handle on Monday, and it played out beautifully. But GTBIF, same deal. 4 hour, a lot of space for a lower high. We're going to look for something like that. Keeping an eye out for the lower high early this coming week. AYRWF, same deal. A lot of space. Again, bulls really want the daily higher low to maintain at that fear low, 255. Just ideally, it's going to take a little bit to work through this range. It's such a wide range, but ideally just trade sideways a bit into continuation. And bulls just want to keep holding daily EMA 12 to try and grind our way back up to the recent high of 409. Key relief. Still watching this 580 level. 580, 579. We broke above it on Thursday, 591, but clearly that's still a resistance zone to be watching, and we're still churning around right underneath it. Bulls want to see closes above 580 to try and turn that resistance into support. Psychedelic. So MNMD. So again, why was I selling MNMD pre-market at 12.50 on Thursday? The answer, I watched Cannabis go up Wednesday after hours and give it all back Thursday. I look at MNMD, we're up 6% pre-market Thursday. And granted, it was possible that the psychedelics stayed stronger than Cannabis and didn't do the same thing. But my mindset was, there's a lot of people thinking, I should have taken some profits on the after hours move on these Cannabis names. So my mindset was, I'm going to be protected and take profit on this, 5-6% higher move from where we closed. And then by the time the morning rolls around, we give back that pre-market strength and we open right at just above the high of Thursday, Wednesday, and then we just give it back into that pullback. So again, my swing mindset is getting out real quick when I see that 10 to 20% pullbacks are on the table, because I'm not going to sit through that drawdown. I would much rather be day trading during that drawdown. But overall, this chart, there's still nothing wrong with it. Anything above 897 is a daily higher low. I still do have a very small swing position here. Good sign that the bulls held the low of Thursday on Friday. 1062 is a short-term support. And there are no red flags on this chart at this point. We know a daily higher low is most likely. If we break 1118 on Monday, we'll be looking right back up at the recent high of 1222. But again, this is just, one of the most bullish charts out there. Cannabis or anything else in these sectors. I mean, look at this move up. This is a 500% move in the span of 4 or 5 months. No, I take that back. Bad math. 420. 420% move from the all-time low. Well, not the all-time low, but just above the all-time low. So definitely still paying attention to MNMD. And again, if I'm going to only be focusing on a name or two in a sector, I want to be focusing on the strongest name, and that is MNMD at this point. ATAI, definitely still doing the same thing. Again, look at the correlations. I mean, this looks like just like CGC or ACB, very similar. So we got the pullback. We didn't get to hourly oversold. We have an hourly downtrend as our guide. We're scouting the daily higher low. Bulls want to hold the low of Friday on Monday to try and shape up that daily higher low, etc. But CYBN, my reason for exiting first thing Thursday morning, I still have a small position, but reason for exiting was realizing we're probably not going to break the high of Wednesday. And if we're not going to break the high of Wednesday, we're going to see hourly consolidation. And if we see hourly consolidation, it can very easily be a 10% pullback. I'm not going to sit through that. So I was exiting in the 45s. And so, if I've got entries into 42s, maybe a 43 average, and I exit at 45 average, 3/4 of that position, my break even is now 43 average, 37. 37 is my break even on that trade because I took profit on 3/4 of that position. So my stop is now under 39 for my small runner position, and I can't lose unless there's a big bad news gap down. So worst case scenario, I will have small profit on this trade. And that's the same thing I did with MNMD way back here where I did a trade. I forget exactly where, somewhere in here, made an entry, took partial profit, set my stop at break even, and let a runner go. And granted, the runner's always small for me, but this runner ended up multiple hundreds of percent in just an ideal scenario. And so that's why I always, on hype names, try and leave a little bit of a runner where worst case scenario, it's break even, and best case scenario, it's, a couple 100%. But overall, going to anticipate that psychedelics are going to trade very similar to the higher listed cannabis names. That's a long video. So summary real quick. We're looking for daily higher lows as most likely. We're using the hourly trend as our guide to help us determine if those daily higher lows are shaping up. Once daily higher lows are set, that then becomes the most important support from a swing trade day-by-day perspective, the daily uptrend. If we lose a daily uptrend, we look for weekly consolidation. US names really want to hold the fear low of Thursday to try and recover and keep grinding up. If we break the low of Thursday, weekly consolidation is underway. We're watching for headlines in April. Safer, Schumer. Oh my God, I just got triggered. You see, that was pure emotion. Thinking Schumer and safe just sent a jolt of disgust down my spine. I don't even want to talk about it. Those of you that have been following the sector for the last 4 or 5 years, 3 years, how long has it been? Know exactly why that just happened to me. Anyways, we'll see if we can get some positive headlines. But just be aware, if we do not get a positive headline in April, there will be a lot of disappointment in the cannabis sector. So how many days? We got 3 weeks? 3+ weeks. One day at a time. Stay protective, establish those game plans, ideally try and position with risk-free runners, take some profit into strength. ACB, just a quick one here before we end it. On Thursday, on that bounce trade, I had a runner. At some point, I had a runner on ACB. And, my mindset was, I'm going to hold ACB. I forget what I said in the chat room. I'm going to hold ACB as long as, we're in a 2-minute uptrend or something like that. And then I sold in the 860s. And why did I sell? I changed things because we just shot up 10% in 10 minutes. If you give me 10% in 10 minutes, I am taking profit every time if there's not a headline. Doesn't mean I have to exit my whole position, but that's the kind of move where if you're not selling there, again, if you're day trading and you're not selling on a 10% move in 10 minutes, that's just greed. And so again, if I sell there and we keep running up a bit higher, I'm A-okay with leaving a bit of money on the table, because if you sell in 10% moves in 10 minutes over however long a period of time, it's going to be a beneficial thing for your account overall. Do good things. Thanks for watching. Likes and shares and all that interaction, always appreciated. Certainly enjoy interacting with you all on social media. See you next time.